Here's a shocking truth that most traders never realize. 80% of all trading losses can be completely prevented if you simply become more aware of your emotions. Think about that for a moment. 8 out of every 10 times you lose money, it's not because the market outsmarted you. It's because your emotions took control of the wheel and drove you straight into disaster. If you don't learn to separate yourself from your emotions when trading, your emotions will inevitably separate you from your trading goals. This emotional control is what separates the unsuccessful traders from the successful ones. But here's what most people get wrong about emotions in trading. Emotions are not the enemy here. They're not necessarily evil forces trying to destroy your account. Instead, emotions are like warning signals that you can learn to read and understand. Think of emotions as messengers bringing you important information. When you feel fear, greed, or anger while trading, these feelings are trying to tell you something crucial about your mental state and decision-making process. The key is to become like a detective investigating these emotional clues. Get curious about what your emotions are trying to communicate. Most traders still believe that you need to completely control your emotions to be successful. This is absolutely not true. What you should do instead is develop the ability to first recognize your emotions, then understand what they're telling you. You need to understand your emotions so that you know exactly what you're dealing with. Only then can you develop a proper plan to handle these emotions when they inevitably arise during live trading. Emotions aren't necessarily negative in trading. There are no inherently good or bad emotions. They're simply emotions, and if you learn to use them correctly, emotions can actually fuel your trading performance. Think about Michael Jordan, who became the greatest basketball player of all time. People often talk about how Jordan knew how to channel his anger into his performance. He would take criticism or defeats personally, then use that emotional fuel to push himself to extraordinary levels. This is a skill that most of us can learn to cultivate. Let me share a personal story that illustrates this point. A few years ago, I was having dinner with a family member who said some incredibly hurtful things to me. She told me that I would never make it in life and that I would never amount to anything. I took those words personally, but instead of letting them destroy me, I used them as fuel to become the best version of myself. Whenever I felt like giving up on my goals, I would think about all the people who doubted me. I wanted to succeed so badly, not just for myself, but to prove all those doubters wrong. Eventually, I did succeed. The lesson here is simple. Use your anger as fuel to work harder. Work in silence and let your success make all the noise. Don't waste time trying to convince people with words. Instead, torture them with your success. Now, let me tell you about one of the most painful and expensive lessons I ever learned about emotional trading. Back when I was a broke 17-year-old college student, I managed to grow a small $500 account into $10,000. Instead of withdrawing my profits like a smart trader would do, I got greedy. I wanted to turn that $10,000 into $50,000 just to see how far I could push it. The next day, I knew that the non-farm payroll report was coming out at 8:30 in the evening Singapore time. This is one of the most volatile news events in Forex trading. Instead of staying away from such a high-risk event, I told myself, why not try your luck and trade it for some quick profits? This wasn't trading anymore. This was pure gambling. At 8:30 when the news came out, the price started collapsing like a house of cards. I immediately entered a sell position with a 3 standard lot size. At that moment, my heart was pumping so fast I thought it might burst out of my chest. I was literally risking my entire account on that one single trade. It was all or nothing. Then the worst thing that could happen actually happened. The price started reversing against me and went all the way back up by 100 pips. At that point, I got margin called and blew my entire account. My account balance went into negative territory. When I saw that on my screen, I completely froze. I didn't know what to do. I was so devastated that I started crying on my bed and punching my pillow. I regretted taking that trade so much that I wished I could turn back time and stop myself from making that one fatal decision. I should have just withdrawn my profits and walked away. Instead, I was back to square one with $0. The worst part was that I had just told my parents that I had made a few $1,000s from trading and could potentially do this full time. Now, what was I supposed to tell them? I never told them about the loss. The next day, I asked my dad for $1,000, claiming I needed it for school fees. I immediately deposited half of that money into my trading account. Now I had another $500 to trade with, and I was determined to get back the $10,000 I had lost. This is when I started revenge trading. I forced trades even though there were no clear opportunities in the market. Bad trades led to more losses, and I ended up blowing that account as well. Keep in mind that at this time, my dad was already 60 years old and still working incredibly hard as a real estate agent to put food on our table. Can you imagine how embarrassing it was when my dad asked me where the money went? I did this pattern several times. Deposit money, blow the account, repeat. Finally, one day I got so sick of losing money that I decided to get my act together. I started learning how to become a professional trader who doesn't trade based on emotions. That's when I first began studying trading psychology and the mental game of trading. This painful experience taught me that technical analysis is not all there is to trading. You need the proper mindset to defeat the mental game, which is by far the hardest part. The biggest mistake any trader can make is becoming emotionally attached to their trades. You get attached to how you want things to be rather than acknowledging what they actually are. If you're attached to your losses and wins, your entire trading journey will become a nightmare. For example, let's say you enter a buy position and start seeing the trade go against you. Price starts falling heavily due to sudden market liquidity changes. Instead of being flexible and potentially switching to a sell position, you continue to marry your trade. You sit there praying to whatever higher power you believe in that the market will eventually reverse and go back up so your trade can become profitable. But the market doesn't care about your prayers. It goes down even further, and eventually you get out with a massive loss because you can't take the pain anymore. In reality, the market was neither good nor bad. It was simply doing what markets do, going up or down based on supply and demand dynamics. This is why you need to accept 3 harsh truths about trading. First, the market is always right. Second, the market doesn't care about you, your bills, or your dreams. Third, the market is not a human entity with emotions. It's an irrational, uncontrollable force that follows its own logic. To trade successfully, you need peace of mind. To get peace of mind, you must learn emotional detachment. Remember, emotional control is not the solution here. Emotional resolution is what you're after. You need to develop the ability to stand aside and observe not just the market action, but also your own thinking patterns. Watch the market with a mind full of interest and curiosity, not one filled with judgment and rigid expectations. Give your mind the time and space it needs to open up and reflect on what's really happening. From this point forward, I want you to monitor your emotions before, during, and after every trade. This will help you know yourself better as a trader and identify exactly what areas need improvement. Now let me share with you my 3-step system for reaching emotional resolution in trading. The first step is to map your emotional patterns. You need to have a clear understanding of what you will encounter on a daily basis as a trader. You should identify the overall big-picture view of your emotional volatility throughout your trading sessions. You also need to understand what these emotional reactions look like on a detailed level so you can quickly spot them and minimize the damage when you're live trading. Start looking closely at the specific emotions, thoughts, decisions, and actions that are automatically triggered when you're in active trades. This data will help you understand the entire scope of your emotional trading problems. For example, let's say you're scrolling through social media today and you see some traders talking about a cryptocurrency that's up 20%. Immediately, you feel a sense of missing out. You don't want to miss this once-in-a-lifetime opportunity. On the surface, this might look like simple fear of missing out, but if you dig deeper, you'll realize that this feeling can actually mean several different things. It could be a sense of greed because you think that if you miss out on this opportunity, you won't be able to find other good money, making opportunities in the future. This thinking is completely wrong because there are always opportunities in the market. If you miss one, another one comes along in the next 5 minutes. This fear of missing out can also indicate anger. You might get upset because you see other people making money from an opportunity that you're not participating in. This feeling violates your sense of control and fairness. I want you to look at the specific instances where you experience these emotions and write down exactly what's going through your mind at those moments. When you map your emotional patterns like fear of missing out, greed, and self-doubt, you'll realize that these patterns happen very frequently and consistently. If you don't address them properly, they will always come back to sabotage your trading success. When you're trading with real money, you're dealing with emotional forces that have the power to completely shut down your rational thinking. Listen carefully to this next point. Your own emotions can shut down the part of your brain that normally controls logical decision making. This is the tricky part because it's easy to be rational and logical before you enter a trade. You haven't experienced any strong emotions yet, so your thinking is clear. But once you're in the trenches, facing real financial risk with your hard-earned money on the line, you start experiencing intense emotions. Suddenly, you can't think clearly anymore. To fix this problem, you need to look for the early warning signs when your emotions are still manageable. You have to be prepared by understanding your emotional patterns, knowing how to disrupt them, and learning how to catch them early. If you don't do this preparation work, your emotions will take control of you. You'll keep making the same mistakes over and over again. You'll keep losing money and blowing account after account. There will be absolutely no progress in your trading performance, which means you'll never become consistently profitable. The second step in achieving emotional resolution is to identify the root causes of your problems. You can't fix a problem that you can't clearly see. To get to the real reason behind your trading difficulties, you need to dig much deeper. You need to uncover the hidden mental flaws, biases, and incorrect beliefs that are preventing you from making progress. You can refer back to the first step where you mapped your patterns. Look for the specific triggers that cause problems and recognize when these problems are being activated. Only then can you actually work to correct them. If you want to identify the root causes of your problems, follow these 4 steps. First, describe the problem in complete detail. Second, explain why you think you have this problem. Third, explain why the logic from step 2 might be flawed. Fourth, come up with a correction to address that flawed logic. Most traders can achieve consistent profits on a demo account, but struggle terribly when trading with real money. On a demo account, they feel calm and relaxed and can execute trades with precision. On a live account, they feel uncertain, hesitant, and start overthinking every decision. This difference doesn't exist when trading with fake money because the results don't actually matter. Losing or winning on a demo account doesn't have any real impact on your life, so emotions are rarely involved. It's like the basketball player who can make all the free throws during practice but misses them during the actual game. Or the actor who speaks clearly during rehearsals but starts stuttering on stage. Or the singer who sounds beautiful in the studio but forgets the lyrics during the live performance. Just like these examples, if you believe that demo trading and live trading are the same, there's a fundamental flaw in your understanding. The flaw isn't that you'll feel some emotions when trading with real money. The flaw is expecting your mind and body to trade without any emotions at all, which is simply impossible. Most traders believe there's a quick fix to their emotional problems with greed, fear, anger, confidence, and discipline. Just like you can't become a profitable trader overnight, you need to go through a proper learning process to eliminate mental trading problems. There are no shortcuts or magic pills. Think for a moment about the quality of trades you've taken over the last 6 to 12 months. There are times when your decisions are absolutely perfect and you win every single trade. There are also times when every trade you take leads to a loss. Aiming for perfection in trading is like aiming at a constantly moving target because there are so many variables that can impact your performance. Variables like whether you had enough sleep, whether you exercised, whether you felt physically healthy and emotionally stable before trading. Add all these variables to the inherent complexity and unpredictability of the market, and you can see why consistency is so challenging. The key here is to focus on reducing the variations in your trading performance. Treat yourself like a professional athlete. If you want to become the LeBron James or Tiger Woods of trading, you have to make sacrifices. Everything in your life needs to support your trading performance. You need adequate sleep, a healthy diet, and regular exercise to optimize both your body and mind for peak performance. The third step is to actively correct your problems. Instead of focusing on growing your account size, focus on consistently correcting your current greatest weaknesses. If you want to improve as a trader and make more money, you must commit to eliminating these weaknesses or problems. These mental flaws have the power to hold you back, and if you don't work on them consistently, you'll never become profitable. This is a crucial part of your growth journey to becoming a successful trader. This step is where you attack the problem by implementing the corrections. This is where you learn how to stop your negative reactions in real time and minimize your costly mistakes. First, you need to understand that when your emotions are running high, your logical thinking becomes very low. Correcting your emotional reactions is a combination of having the right logical framework and ensuring that this logic is so clearly defined in your mind that it's strong enough to stop destructive patterns in their tracks. After you've identified a negative pattern, you want to disrupt its momentum immediately. If you don't, the trade will likely become a loss, and you'll get the same disappointing results you always get. As soon as you recognize that your negative pattern has been triggered, take a deep breath. Stand up and go for a walk, or even talk to a friend about something completely unrelated to trading. Next, you want to inject logical thinking to overpower your emotions. You can do this by talking to yourself and creating logical statements about the emotions you're experiencing. Here are some examples of what I mean. If you're lacking confidence, tell yourself, I spent thousands of hours developing this trading plan. Am I really going to let this one trade make me doubt everything? If you're scared of failing, tell yourself, sometimes the risk of staying on the sidelines is actually greater than the risk of taking action. If you're losing focus, tell yourself, trading is my business, so I need to run it like a serious business that demands my absolute best. When this trading session is over, I can focus on other things, but not right now. I know this might sound silly, but trust me, this technique actually works. The whole concept is to increase your logical thinking when your emotions are high so that logic can overpower the emotions and help you think clearly. Create specific and achievable weekly goals with daily benchmarks to measure your progress. This approach will help you focus on improving your weaknesses rather than just making money. Focus on the process and execution instead of your profit and loss numbers. This way, you'll be able to tolerate the inevitable ups and downs of trading much better. And you'll actually enjoy trading more because you're focusing on things within your control. Now, repeat this entire three-step system consistently. What's the result of following this systematic approach? When you trade, you'll realize that you're much more calm and have genuine peace of mind. You're not trying to control your emotions or letting your emotions control you. Instead, you're aware of your emotions and have reached a healthy resolution with them. Imagine not having problems with fear, greed, doubt, confidence, or discipline. That mental freedom alone is worth all the hard work required to get there. If you use this three-step system consistently, you will achieve this level of emotional mastery. Throughout your entire life, you've been conditioned to believe that mistakes and losses are inherently bad. When you were in school, you got looked down upon for having poor grades. When you went to work, your boss scolded you for making careless mistakes. So naturally, we feel that mistakes and losses are terrible things to be avoided at all costs. But what if I told you that losses in trading are not actually bad? Let me explain this concept using a simple analogy. Pretend you're at a casino for a minute. Let's say you're playing roulette. If the ball lands on red 6 times in a row, would you expect the next spin to be black? Or let's say you're rolling dice. If you roll the dice and it doesn't generate your winning number, would you get angry at the dice? This is what we call the gambler's fallacy. This mental trap occurs when you believe that a certain random event is more likely or less likely to happen based on the outcome of previous events. In trading, anything can happen at any point in time. You must accept the fact that the market can do literally anything at any moment. Trading is not about predicting the future, because accurate prediction is impossible. Once you can accept this fundamental truth, it becomes much easier to take losses without damaging your self-esteem. This means you won't feel like a terrible trader when you go through a losing streak, because for each trade you take, you expect a random outcome. You understand that each individual trade is unique and has no memory of previous trades. No matter how confident you are about a particular trade, the chances of it being successful are still roughly 50%. Expect losses 50% of the time and embrace the fact that both losses and wins are inevitable parts of any trading strategy. If you can't learn to accept small losses, sooner or later you will be forced to take much larger losses. What separates successful traders from unsuccessful ones is the ability to accept trading unpredictability in the short term while maintaining faith in statistical probability over the long term. When you truly accept that trading is simply a probability game, concepts like winning or losing, being right or wrong, will no longer matter to your emotional well-being. This is the mindset shift that transforms struggling traders into consistently profitable ones. So how do you achieve peak performance when trading? Just like professional athletes, it takes thousands of hours of practice and training to become the best trader possible. You need to develop the skill to make good risk and reward decisions consistently. To help you achieve this, I have 3 essential steps for you. First, plan the trade. Second, trade the plan. Third, review and adjust the plan. Let me explain each of these steps in detail. Plan the trade. If you fail to plan, you plan to fail. This is why you must have a solid trading plan that enables consistent decision-making. Your plan should clearly define which trades you should take and which trades you should avoid. A proper trading plan should explain exactly where to enter and exit trades, how to manage positions once you're in them, and what position size you should use for each trade. Your trading plan must be structured to minimize losses when you're wrong and maximize profits when you're correct. A well-designed trading plan will redirect your decision-making process away from emotional impulses and prevent you from making costly mistakes based on feelings rather than logic. Trade the plan. This step is about taking the trading plan you've created and following it with complete discipline. Your plan is absolutely useless unless you execute it properly. Fear in trading comes from uncertainty, fear of losing money, fear of failure, fear of making mistakes. If you have a trading plan that's been proven to work, it will remove much of that uncertainty. Do the right thing at the right time by following your trading plan religiously. Execute trades based on your predetermined criteria. Know exactly when to enter and exit positions and how you're going to manage risk and potential losses. This systematic approach eliminates the guesswork and emotional decision, making that destroys most traders. Review and adjust the plan. Professional athletes are constantly reviewing their past performance and thinking about ways to improve for next time. As traders, we need to do the same thing. We need to review our trades and look for small improvements that we can make to potentially become better performers. Here's a sobering truth. 90% of your trading losses occur because you don't follow your trading plan. You keep moving your stop loss because you're afraid of being wrong. You'd rather be right than make money. You over-leverage and use position sizes that are way too big for your account because you're driven by greed. Most of these trading psychology issues can be fixed if you simply follow your trading plan consistently. Unfortunately, we often only realize this after the trading day has ended, after we've already made the mistakes that led to our losses. If you're doing the right things all the time and taking only trades that align with your trading plan, then you have nothing to worry about. Focus on trading your system with unwavering discipline, and the profits will eventually follow. Concentrate on your process rather than short-term results. Remember, one trade can have a random outcome, but 100 trades can be used to profit from your statistical edge. Trading is like a video game where I've just given you the cheat codes to win. The question is, will you use them consistently? The path to trading mastery requires dedication, discipline, and continuous learning. You've been conditioned to be a losing trader for so long that rewiring your brain and reprogramming your subconscious mind for success will take time and effort. But with the right approach and consistent application of these principles, you can transform yourself from an emotional, inconsistent trader into a calm, disciplined, and profitable one. The next 5 years of your life are going to pass whether you work on improving your trading or not. 5 years from now, you will surely arrive at some destination. The question is, Where will you have arrived, and who will you have become? Now is the perfect time to design the next chapter of your trading journey. Remember, success in trading isn't about being the smartest person in the room. It's about being the most disciplined person in the room. It's about having the patience to wait for the right opportunities and the courage to act when they present themselves. Most importantly, it's about having the wisdom to know the difference between the two. Your trading journey is unique to you, but the principles of emotional mastery and disciplined execution are universal. Apply these concepts consistently, and you'll join the small percentage of traders who actually make money in the markets over the long term.